For Tesla investors, the coming year may be a game changer as we begin the new year with a chance to consider the past and look forward to the future. This might be a historic moment for investors in the electric vehicle firm, according to a number of variables. A number of amazing elements come together to make this a really exciting time for Tesla investors. Are you prepared to defy expectations and work together to become a formidable force in the Tesla investing world? Despite market turbulence and doubters, Cathie Wood, CEO of ARK Invest Management LLC, is more bullish than ever about the electric car giant thanks to her unmatched knowledge and track record. Cathie believes that for the next 5 years, the price of Tesla stock will soar by a factor of 5. Come along as we explore the thoughts of this fearless investor and learn the motivations behind her steadfast faith in Tesla, from her most recent shopping binge to her ambitious forecasts. Before we go there, hit the like and subscribe buttons on this video if you're interested in the future of the electric car business. Did you know that even though a lot of people have given up on Tesla and its CEO Elon Musk and have sold their stock due to the company's recent unstable performance, even though February has just begun, Cathie Wood is more optimistic than ever about the top EV company? Based on ARK's daily statistics, Cathie Wood predicts that over the next 5 years, the stock of Tesla will climb by a factor of 5, expressing her optimism about the company's future. In the first trading session of 2023 in the United States, Cathie Wood, the CEO of ARK Invest Management LLC, purchased almost 176,000 shares of Tesla. This has shown a renewed belief in the EV manufacturer at a time when many other investors have abandoned the business, even in the face of generous incentives. Due to Tesla's failure to meet quarterly delivery projections, the stock price has dropped by 12 points since October 3rd, when their most recent buying binge started. According to ARK trading data compiled by Bloomberg, Wood's ETFs have acquired just over 938,000 shares of the electric vehicle manufacturer. This October-December period was the first quarter in which ARK purchased Tesla stock. As many people know, 2022 was a challenging year for Tesla. The company aggressively discounted its products in the US last month, giving customers a $3,750 discount. However, this seemingly bold move from the market leader in EVs didn't pay off. One could argue that Tesla was selling cars at a discount the month before in order to, say, tee up a refreshed tax credit that would be implemented in 2023, but it was later discovered that the tax breaks wouldn't apply to many of the automakers' offerings. Despite this, Tesla nevertheless let down investors by announcing lower than anticipated deliveries for the fourth quarter, following a third consecutive quarter of deliveries for the company. Following the miss, several analysts cut their 12-month price projections for the stock, putting the average Wall Street forecast down to its lowest point since October 2021. Despite this, even if the market has increased by 4%, since Elon Musk took over as Twitter CEO on October 27th, the average target price indicates that the stock will rise by much over 100% in the next 12 months. Since then, Tesla's stock has dropped dramatically. If you trace the stock chart all the way back to its peak in late 2021, you will see that shares have dropped by about 70%. Investors were disappointed by the fourth quarter's lower than anticipated deliveries, but the good news is that Tesla is still rapidly growing its market share despite the difficult year automakers had in 2022. Tesla's vehicle deliveries increased by 40% in that year, and Wood has been increasing her stake in the company over the past few months, despite the stock's reversal in direction. The CEO of ARK Investments, which manages the widely held energy select sector fund that tracks the shares of energy companies, recently said that the market was acting irrationally. On the other hand, Tesla will continue to gain market share because it recently aggressively lowered prices, which put pressure on other manufacturers to follow suit and hurt its competitors. It is estimated that over the next 5 years, global oil demand will decline by 30% or more. ARK Investments CEO Cathie Wood said, "We are bullish as we have ever been about Tesla. As a result, ARK is still optimistic about the firm and has predicted that its value will climb by 10 times. This optimism stems from the conviction that, as Wood herself stated, Tesla can double its addressable market by cutting the cost of an electric car in half. When asked what she thought about large companies competing with Tesla and the production of electric vehicles, Woody cited the Tesla autonomous taxi platform as an example of the kind of innovative change that was needed in the book In Harm's Way. According to Wood, unless they want to lose money on their cars, no other automaker is going to be able to compete with or surpass Tesla's combo." In a Yahoo Finance article from last year, our CEO Cathie Wood expressed her belief that gas-powered vehicles will become obsolete over the next 5 to 10 years, and the traditional auto industry must find a way to transition to electric vehicles. Wood believes they are failing miserably at this. As buyers begin to switch from gas power to electric and consider the features of various cars, brand loyalty will decline. Although financial returns in the years to come may not be as high as they have been in the past, Tesla has risen to the top of this industry and is positioning itself to lead the electric vehicle market into a new era. During an appearance on CNBC's Squawk Box in mid-October, another ARK executive expressed confidence about the leading electric vehicle manufacturer, arguing that the company had a lot of irons in the fire and that investors should think about whether or not this is a good time to buy. Burt is positive on Tesla, as explained by Tasha Keeney. In addition, Wood stated in a separate interview with Yahoo Finance that she believes Tesla will transition to an autonomous taxi platform in 2024 to meet its goal of growing deliveries by 50% annually over several years, an objective Tesla warned it will fall short of in 2022. Tesla will likely make compromises when it comes to gross margins, but I believe Elon is as focused as ever on that Tesla will continue to be the world's dominant seller of electric vehicles. Keeney claims that bullish experts and investors are confident that the company will continue to lead the electric vehicle revolution, which is finally gaining traction in the solar energy and battery storage industries. On the other hand, pessimistic experts and investors are concerned that the company won't live up to its potential and will only become another product accessory rather than pioneering anything truly revolutionary. Some experts see Tesla as delivery growing by 40 in 2023 to 1.8 million to 1.9 million vehicles from roughly 1.3 million in 2022. The company's detractors see it as an expensive, vulnerable to competition, and highly subsidized company. Investors will be persuaded that Tesla's 2023 earnings prediction is reasonable and that the stock price might have fallen too far if 2023 delivery estimates are fulfilled. Let me recap why these so-called experts are incorrect. First off, Tesla has experienced phenomenal growth over the last several years, and this trend is anticipated to continue in the upcoming year. The company has made significant strides in increasing its production capacity, developing new technologies, and gaining market share in the electric vehicle space. Additionally, Tesla's recent entry into the energy storage market is expected to be a significant growth driver for the company. With the demand for renewable energy solutions growing as the world becomes more electrified, the energy storage market is expected to grow to be a multi-billion-dollar industry in the near future. Moreover, the company's ongoing efforts to lower the cost of battery technology could result in even more disruptive innovations. Taken together, these factors make this an extremely exciting time for Tesla investors in general. This year, Cathie Wood and her investment company ARK Invest have been more optimistic than ever about Tesla shares. She is a strong supporter of innovation and has been outspoken about her support for Tesla and its upcoming innovative projects. We hope this movie shed light on finance and investing, but remember that the success of the financial market depends on research decisions. Always seek advice from a financial counselor before making an investment. If you enjoyed the video, please hit the like and subscribe buttons. I'll see you in the next.